It's the first quarter, this quarter coming up, their guidance, it was weaker than expected by quite some margin. They expect to make around 11 billion yuan in revenue, but it's lower than the street's estimate of around 15 billion. And when you look at some of the analysts' reaction this morning, they're all talking about, seeing NIO having a challenge to deliver more vehicles and ramp up production as they go through the year.
Potential, growth, and resilience. Did you know that NIO recently reported a significant Q4 loss of $2.9 billion? Despite this setback, there's an air of optimism surrounding NIO's future growth prospects. With their innovative technology and expansion plans, could NIO be on the brink of a turnaround?
Hey, we're up almost 2% here.
Yeah, well, investors are having mixed feelings about this earnings report. And you're right, shares had fallen to their lowest since about June 2020, but now shares are higher because the company did beat expectations for revenue and earnings, and the outlook was not that bad, but there's still this underlying fear about demand for EVs, pricing, and of course, the high competition happening over in China. Now, if we look at the numbers, the adjusted loss was at 39 cents, which was a better than expected loss. Revenue was above estimates. It rose year over year to about $2.41 billion. And deliveries were up about 25% year over year to just over 50,000 deliveries. And full year deliveries, that was deliveries for the quarter, but full year deliveries were up 30% year over year to 160,000 units. But gross margin was about 7.5% in the fourth quarter. That was below the expectation of 10.2%, but still higher than the year before.
Early this March, NIO disclosed a widening annual loss driven by intense global electric vehicle market competition. The company's net loss for the fourth quarter alone amounted to 5.4 billion yuan, bringing its total annual deficit to a staggering 20.7 billion yuan, which is equivalent to 2.9 billion. Despite better-than-expected sales in the final quarter of 2023, NIO's chief financial officer, Stephen Fong, outlined plans to prioritize business objectives, enhance system capabilities, and optimize cost management for the year ahead. However, with vehicle margins still falling short of analyst expectations at 11.9% in the fourth quarter, NIO faces challenges in achieving profitability. Unlike its profitable rivals, such as XPeng and Li Auto, NIO has not unveiled any major product launch plans for 2024. Nevertheless, analysts anticipate the introduction of a mass-market brand aimed at competing with Tesla's socially built models, which could potentially mitigate losses for NIO. In 2024, NIO anticipates a decline in car shipments for the first quarter, projecting to deliver up to 33,000 vehicles, a significant drop from the previous three-month period's 50,045 units. This decrease comes as a blow after the company's deliveries fell short of its original sales target last year. Despite efforts to boost sales, gross margins for the fourth quarter fell short of market expectations, standing at 7.5% compared to the anticipated 10.2%. The company's financial struggles prompted a capital injection last year through a share sale to CYVN Holdings LLC, backed by the Abu Dhabi government, injecting $738.5 million in June. However, given current spending rates, this cash infusion might only provide temporary relief. NIO's upcoming mass-market brand, Alps, is set to debut in the fourth quarter. It will feature models with swappable batteries to compete with Tesla's Model Y SUV. The first model is designed for larger families and boasts a 10% lower manufacturing cost than the Model Y. Additionally, NIO plans to introduce a more affordable sub-brand in 2025, targeting vehicles priced below 200,000 yuan. Expanding its presence, NIO is also venturing into the United Arab Emirates market. In addition, NIO streamlined its operations and cut costs by reducing its workforce by approximately 10% in November. Furthermore, the company considered spinning off some non-core businesses to further reduce expenses. In December, NIO secured a substantial cash injection of $2.2 billion from CYVN Holdings, with the latter set to acquire a 20.1% stake in NIO and gain the right to nominate 2 board directors upon completion of the deal. Moreover, NIO recently entered into a technology license agreement with a subsidiary of CYVN, granting a non-exclusive and non-transferable worldwide license to its existing and future technical information, solutions, software, and intellectual property rights. Additionally, NIO is aggressively promoting its battery swap technologies, forging partnerships with several Chinese automakers, including Geely Automobile Holdings, and collaborating with local authorities in Anhui Province, where its factory is located. These efforts aim to address driver concerns about range and charging times by allowing EVs to quickly swap depleted batteries for charged ones in minutes. But will NIO be able to regain investor confidence and drive volume growth? According to Morgan Stanley analyst Tim Seow, the company needs to demonstrate a significant rebound in sales volume, aiming to reach a monthly run rate of 20,000 units by the end of 2024. Seow emphasizes the importance of this volume recovery, especially given that the contribution from new models under the Alps won't be realized until the second half of 2024. Despite concerns over liquidity, Seow maintains a bullish stance on NIO, reaffirming an overweight buy rating with a price target of $13, suggesting potential returns of 89% over the next 12 months. Additionally, it's noteworthy that while NIO reported a decline in revenue and widened net loss for its fiscal fourth quarter, both metrics showed improvement on a year-over-year basis. Furthermore, analysts at Deutsche Bank reiterated their buy rating on NIO shares, projecting a potential climb to $9 within the next 12 months. This price target implies a 65% upside from the current levels. But before we move on, we just want to thank you for watching this far. Meanwhile, Barclays analyst Jiong Shao adjusted his price target for NIO stock, reducing it from $8 to $5 while maintaining an equal weight rating. Shao's ranking on TipRanks places him at 4,318 out of 8,757 total analysts, with a success rate of 39% and an average one-year return of 1%. Similarly, CLSA analyst Ding Luo also lowered his price target for NIO to $6 from $9.80, citing a 10.3% quarter-over-quarter decline in revenue and a significant increase in net loss growth, which more than doubled to 20.8%. On the other hand, Deutsche Bank expressed a more optimistic view, reiterating its buy rating on NIO shares and maintaining a price target of $9. Analyst Vincent Hao highlighted that NIO's Q1 guidance exceeded expectations, with a production ramp-up expected in March following February's production of 8,132 vehicles. Overall, NIO stock has an average price target of $9.49 among analysts.
First of all, I think NIO is in a very, very hyper-competitive market here in China. Obviously, there is a bid, and there's typically a pullback in the beginning of the year when you enter a new calendar year, as the year-end numbers tend to be inflated a bit as dealers close. But even with that, given how competitive the market is, they've had to take down pricing in the second half of last year in order to achieve the growth that they were able to do in the third and fourth quarter as they launched new products.
Now, let's look at NIO stock's performance over the past 3 years compared to the broader market. In 2021, NIO stock returns were negative 35%, followed by negative 69% in 2022 and negative 7% in 2023. In contrast, the S&P 500 saw returns of 27% in 2021, negative 19% in 2022, and 24% in 2023. This indicates a consistent underperformance by NIO compared to the S&P 500 during these years. While individual stocks like Amazon, Tesla, and Toyota have also faced challenges in outperforming the S&P 500, the Trefis high-quality portfolio has consistently outperformed the benchmark index, providing better returns with less risk. Looking ahead, there are concerns about global EV demand, with major automakers like Mercedes-Benz and Ford scaling back their electrification goals. Although the Chinese EV market is expected to grow, competition and price wars are intensifying. NIO has faced concerns over price cuts impacting average selling prices and reducing gross margins. Despite these challenges, NIO has expanded its model lineup, focusing on battery technology and partnerships. Additionally, the company aims to enter the lower end of the market with new sub-brands, such as Alps, offering EVs at more affordable prices. Currently, NIO stock trades at just 1 times estimated 2023 revenues, which is lower than other EV players like Tesla and Li Auto. So, can you see NIO as a promising investment opportunity? Well, here's the deal. NIO's growth potential lies in its strategic market positioning within the booming electric vehicle industry. With a strong focus on innovation and expanding its product lineup, NIO aims to capture a larger share of the growing EV market, particularly in China. But wait, there are risks to consider, too. Market volatility, intensified competition, and regulatory changes could all impact NIO's stock performance. Investors need to be aware of these factors and monitor them closely. However, potential catalysts could drive investor confidence in NIO. These include successful product launches, technological advancements, and expanding into new markets beyond China. Achieving key milestones, such as increasing sales volumes and improving profitability, could also boost investor sentiment. Now, when it comes to long-term investment considerations, diversification is key. While NIO may offer significant growth potential, it's important for investors to balance their portfolio with a mix of different assets to manage risk effectively. So, are you ready to take a position on NIO? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO's Q4 earnings report, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.